I know your time is valuable, so I'll get right to it. Throughout this episode, I'll be giving out the exact strategies that took me from £100,000 in bad debt to building a $13 million portfolio. But this journey has given me more than wealth. It's inspired a mission to help everyday people like you take control of your financial future. So every week, my team and I pour everything into bringing you market updates and proven strategies because we genuinely believe that everyone deserves financial security. No gimmicks or empty promises, just real insights from someone who has walked this path. And to help spread these insights to others who need them, I truly appreciate if you could subscribe to our channel. When you hit that button, you're telling the algorithm that our content is valuable, which helps us reach more people who deserve this opportunity. You're joining a community dedicated to financial independence for everyone. If you do subscribe, here's my promise. My team and I will make this show better for you every week. We'll listen to your feedback, answer your questions, and continue supporting your journey to financial success. So thank you for being part of this mission. Hi everybody, my name is Marcus de Maria and welcome to the very first, can you believe it, the very first episode of the live, so bear with us because we are having technical challenges, live episode of the Lunchtime Investor. Welcome. Keith is here as well, one of our traders here. If you'd like to say hello, Keith.
Hello.
All right, fantastic. We should have Dennis here as well. Is he in the house? Yep, he should be there, coming in any second now. Listen, the whole point of this is that you eat and we do the talking. It's the Lunchtime Investor. The whole point is that you can take 20 minutes of your time and maybe use a little bit of electricity and a little bit of, where you're working, their computer power, to ensure that at the end of it, you don't have to work for the rest of your life, that you have choice. We love working. You might want to, but you might want to. We've got a lot to cover here today. But before we start, this is the Easter edition. So, Keith, I've got something here for you. This is the Easter egg.
Oh, wow.
Thank you very much.
Okay, thank you.
Okay,
I've
great.
got a couple of fruit.
Fine.
No, you want a health
no, that's
kick.
fine.
You want
that's
a health
fine.
kick?
Yeah, that's true. So are you. All right. So listen, happy Easter, everybody. This is we did a wonderful Easter hunt yesterday with everybody, and these guys are ruthless. They found every single egg that I hid. We hid over 100 tiny little eggs, and it was absolutely fantastic.
Bit of a challenge. Someone stole the ones I found.
That's true. They did.
So
listen, welcome everybody. We've got lots of people here on the chat as well, so you'll be asking your questions. Now remember, we are not financial advisors. That's very, very important. Remember, we're educators, so we're going to educate you on what we are doing. That's it. That's all we can do. It's not financial advice. Make sure that you do get that. Okay, so we have Dennis here. Are you here, Dennis?
Yes, I've been let in now. So welcome everyone. Happy Easter. Great to be here.
That is wonderful. Okay, so Dennis, what are we going to go through first? What is the topic of the... Can I have lunch or not? Am I not? I'm not allowed to. It's we talk, so I'm not...
You've got to talk.
I think you can have lunch. So, this is episode 1, which is amazing. So what we're going to be discussing today is the $10 trillion market crash and how we are handling the situation, and also the Trump's tariffs, which is going to be very exciting. Keith, Marcus, are you excited?
We're very excited. About what? About the episode or Trump's tariffs?
Well, about the
Just want to
market
be very
crash.
clear.
Both, all of it.
Okay, yeah, very excited.
So
Not sure about Keith, but I'm very
and
excited.
you can see my screen, right? Because I think if you can see it, everyone else can see it as well.
Yeah, absolutely. And for those people that might be listening on the podcast, if there's anything that's really important, we will put like graphs and things like that and charts and that. We'll put them in the notes. But for now, let's go, Dennis. What's the first thing?
Perfect. So what's happening in the market is a few things that we need to discuss today. And I think the first thing is that the markets are highly volatile with Trump's new tariffs and trade wars. We're going to be talking about what the media is calling the $10 trillion crash, which is really creating panic in the market, which we need to address today as well. We're seeing maximum fears and what this usually signals, and then what usually follows could be some bullish momentum. So those are the points we're going to be discussing, and then of course what we're doing in stocks and cryptos as a result. So are you ready to dive into the first point?
We are ready, Dennis.
Yay, amazing.
Let's just see whether people on the chat are ready. Are you here? There's a huge echo here. Dennis, yeah, especially Dennis. It's always Dennis.
Always Dennis.
We're fine, right?
We're perfect.
Yeah.
It's because I have so much power, it's echoing across the universe.
Okay, that's probably what it isn't. But anyway, we'll try and get that sorted definitely for next time if we don't get it sorted this time. Okay, so without any echo, take us through the first points, Dennis.
Yeah, so the point here is that the market has been very volatile, causing panic, obviously. We've seen that Donald Trump's worldwide tariffs has created a $10 trillion market crash. So what are we thinking about that? What is our interpretation of what's happening in the market? And maybe Keith, you would like, as the fundamental genius as you are, take us through what you think is happening.
He's going to take you through the fundamentals, but let me just say that, the tariffs, now, often it is just a negotiation tactic. We realize that, right? So he's saying we're going to do this, this, and this, gauge the reaction, and then he's going to either go harder or he's going to go softer, depending on how others react. So for me, it is a negotiation thing. By the way, no one's perfect, right? People keep attacking him, not surprised. But no one's perfect. He's just doing it his way, and he was elected to do that, and he is doing what he was elected for. Love him or hate him. That's all he's doing, peeps. Okay, that's all he's doing. But now you can have the real story, which is what Keith's going to tell us.
100%. What you just said, he is doing it as, for me, more of a power play, right? He wants to try and come to some level of a trade negotiation. They want the one thing that I didn't get about the reciprocal element of the tariffs is reciprocal means tit for tat. What one country does to the US, he'll do exactly the same. And he didn't do that. And that's one thing that the market didn't really like, because as soon as he started to come out on Liberation Day, as he called it, and these are the tariffs that I'm putting out, not really many of them were reciprocal, unless it was the UK.
But they were less, weren't they? They weren't like, so if somebody's doing the tariff of 100% against America, he didn't go in at 100%, he went in at 50%.
Yeah, and it seemed a bit more fairer.
Yeah,
okay? But
so what's wrong with that?
Because the market was talking reciprocal, they were expecting the same.
But then why did it go down?
Because, again, it was right. If China are issuing 50% tariff, we're going to issue 50% tariff, and then that would have been good, right? Because that's what the market was pricing in. He didn't come at that point. He actually increased tariffs around China, which the market didn't like, because the US is heavily reliant on China for tech, as we know. Okay, mobile phones, semiconductors. So the increase in tariffs there is really putting pressure on tech-based companies.
Right, which is probably why he's now changed that, right? You've got to start somewhere. It's like with our investing. Isn't that what we do? We have one entry point, okay, and then from there, that is our price.
Correct.
Okay, and then from that point, it either goes up, in which case we're in profit, or it goes down, in which case we do something else. But you've got to start somewhere. You've got to start somewhere, right?
100%.
Okay, brilliant. Anything that you have there, Dennis, or can we move on to the next point?
Yeah, I think the quick thing I want to add is it created a lot of uncertainty, and even the Canadian, I think is a prime minister, but the leader in Canada said that he was not too happy with the tariffs, and if it continued, we're going to shut down the electricity around a lot of different places in the US where they provide electricity to. So even though they were reciprocate, well, I can't even pronounce it. The thing that Keith said.
What he said, tit for tat.
What he said, that's the one. So I think the problem was not that the tariffs, that was one piece of it, but I think the bigger piece was that it created a trade war, if you like. If you do that, we will close down electricity, China will do this, all of these different things. So I think that's
saying, if CD Silva is saying negotiation tactic, you mean market manipulation to profit from for him and his oligarch cronies. I mean, yeah, potentially.
Yeah, there's definitely an element of that.
But what I always say is, there's nothing I can do about that. So I always say, okay, so how can I react for myself, my family, and obviously our amazing membership as well? Because honestly, I can't influence Trump. No. Can you influence Trump?
I wish, but we can't.
No, not yet. Okay, we're working on that, peeps. Maybe next episode. All right, Dennis, what's next?
So next up is that what has happened, though, is that this has created an immense fear in the markets that we saw around COVID, literally as the same level of panic and fear in the market. And this was the 4th of April. We saw these lows, like the Fear and Greed Index, just to give everyone some context. It measures the sentiment in the market among selling and buying, among the social media, headlines, all of these things that we would consider kind of sentiment or what people feel is about to happen in the market.
So normally when there's extreme fear, as the great Warren Buffett always says, I guess we're going to be repeating.
Before you say that, here you go. Now you can say it.
Okay. What just happened? No idea.
No, I changed.
Oh wow! No way! Oh wow! Dun dun dun! Great minds think alike.
Like.
There you go. Be fearful when others are greedy, and greedy when others are fearful. But before you take that away, we should have the Marcus de Maria version, because for years I've been saying, well, that's easy. Like, oh, they're fearful, so I'm going to get in. Click. Oh, yeah. Okay, but what about when others are fearful, but I'm also fearful? Am I right? Any members here? Come on, isn't it? It's a different game, isn't it? When others are fearful and you're not, you just get in and follow the rules. But when you're fearful, you're like, do I do it now? Don't I? And then the mind takes over. Isn't that right? So anyway, absolutely. And so it's a contrarian indicator, but that doesn't mean now is the time to get in. Remember, an indicator is just an indication. So it doesn't mean just because somebody says something or something says something, we just get in. That's all it is. That's with RSI, that's TSV, stochastic, MACD, all these amazing indicators that are the holy grail. No, it's just an indication for us to look closer. Okay? And if you want to know more about the strategies, of course, make sure you get your copy of the Lunchtime Investor, especially when we're talking about cryptos, although I think we're just talking in general right now. We'll talk about that a little bit later, because we're just talking in general right now.
100%. And I think one of the biggest challenge people have is fear generates more fear, right? And it's, as you rightly said, it's so easy to say, everyone's fearful, I'm just going to buy. But what am I going to buy? And this is where people have that struggle, because number one, you need to find the right asset, the safest stocks possible, the safest cryptos possible as well. What is the safest asset for me to put my money in? And then the second point of that is, once I found that asset, do I just jump in? Do I just throw all of my money straight away into the market? And again, this is where the strategy comes into play.
It's so true. I think most people do believe that, when somebody like a newspaper says, now's the time to get in, or a pundit on TV, now's the time to get in, they think that means putting all your allocation in at once, where it absolutely doesn't. You need to feather in. You need to feather in. How do we do it, Dennis?
Well, we said it, we feather in. And I think it's important as well. I mean, we're going to look at that a bit later, but I think looking at companies such as, Apple, etc. Last time Apple was down 35% was in 2020 during COVID. And even after that, we've had many bigger market corrections. So I think you rightly said it. We do feather into the market. But what I think is very important, which is what we can look at here in the next picture, is on every single big crash in the market, if you like. I can see if I can even draw here. I'm not sure if anyone can see that, but hopefully these kind of yellow, or I'm colorblind, but orange, yellow, whatever color is, Easter colors, we can see here, right, that all of these pullbacks you're seeing of 20, 30, 40%, those are big, like the great recessions. We had the Black Monday. Why do you look so confused, Marcus?
Oh, no. Just, I'm in awe of your technical ability. That's all. the one thing about this is, again, it's kind of, you're saying the same thing, but when you say this, probably you're going to say this is a great time to get in, but it doesn't mean that it is right now necessarily with all your money. We don't know how much further it is going to go down. We also don't know whether it's just going to carry on going up now. We have no idea. And if anybody's here thinking that, we, Marcus de Maria and Keith Sullivan, we know exactly what's going to happen. Did you have that crystal ball, by the way?
Unfortunately,
we got the ball there, we got the bear there. Where's
the crystal ball was backlogged.
Do we have a crystal ball?
No, it was backlogged from Amazon. There was a delay in delivery.
Actually, that's not true. One of our members, right? She gave us.
Oh no, she did. Yes.
Crystal ball.
Yeah, and that went missing, and now we found it again.
It's over there.
And it's somewhere outside.
You need the crystal ball to find the crystal ball. Okay, brilliant. So all of these are great. It's a contrarian thing when things are going down, fearful, etc. But you do need a strategy with rules. That's the main thing. And if you do want those strategies, they are obviously, well, I say obviously, they're in my book. So you can download that. It'll all be down by the notes and whatever they call it nowadays. I'm showing my age here. So make sure that you grab your copy of the Lunchtime Trader for stocks and the Lunchtime Investor for cryptos. Okay, we're having a couple of chats here, okay? Now, Annie, for example, is saying something very different to CD Silver. She's actually saying, well, isn't he pushing down the market so everyday people can get in, where CD Silver is not in agreement here. You don't really believe he or the oligarchs give two shoots, I think he meant that, about any of the little people. Nope, they're happy to make their money irrespective of our very tiny investments. Who knows, right? Who knows? Obviously, the cynic in me, but one would hope
we can have conspiracies around it. And if you want to put your tin hat on and go into a conspiracy chat, is the tariff situation a cover-up for a bigger play of potentially weakening the dollar during the debt refinancing cycle? Potentially, right? Because countries can't refinance debt at such a high dollar rate. So what they want to do, they want to bring the dollar value down so they can refinance their debt at a cheaper rate. So could that just be the tariff situation that creates a stimuli to push down the market, weaken the dollar? Potentially. No one knows what truly happens. And this is one thing that I'll always look at is we have no control over what the US government does or what happens on the macro side of the economy. All we have control on is what action we can take. And I've spoke to so many people and they were like, I'm fearful, I'm playing the wait and see game. The wait and see game makes you no money. Okay, because people that go, I'm going to wait for the bottom, wait for the bottom, wait for the bottom, all of a sudden, when the bottom is in, the market's already recovered and they've missed their opportunity.
I agree with you. I hear that a lot. Talking about stocks, normally it's with Bitcoin. They say, but I'm going to wait because it could go down 50,000. But what if it doesn't? So, and then therefore you'll never get in. So start getting in now, feathering. By the way, just to explain, feathering in means a predetermined allocation at certain prices that we know in advance, right? You've got to know in advance when you're going to. And none of this is perfect, by the way, right? None of it. No one can time the market, not even Keith.
I wish.
Maybe Dennis.
But
I definitely can't, right? So therefore, and also you shouldn't be spending all your time around this. Just spend 20 minutes a day. Today I'm a little bit longer because it is,
the first episode.
Absolutely.
And an Easter special.
Well, I was going to say, I'm still waiting for my Easter egg. It's all right. The day is young.
I'm helping you with your health kit.
Thank you. Okay, we have a couple of things here, but then we should go on, Dennis. Like, if it's all over with stocks, etc., shouldn't we be looking at cryptos maybe? Let's look at both. Dennis, what's next?
We're going to get both. Just to have another picture, just to show you exactly what we've been discussing. Each of these big crises where the world is supposed to end, but I do agree with you on that as well. We can only focus on what we're doing. That's what we have control over. And even Warren Buffett, last Friday, he was down 10 billion on his portfolio. So even the great one.
Here. That's not fair. That's not fair talking about billions because
he was down 5% on his portfolio that he's had invested. 5%. But nevertheless, I think that we have the opportunity to use these for our advantage. Just think differently than the rest of the 90% in the planet that just buys when Bitcoin is at its all-time high or when stocks are at its all-time high. And then when it's on sale or it's down 34%, then no one is there to be seen. So you can see the dot-com crash, very big crash. We had all of these, a roaring 50s peak, we crashed, but every single time we have gone higher. And literally a few months ago in January, the market was at the all-time high. So yes, we will see pullbacks, we will see crashes in the market. And but that's usually, why would it be different this time? You said this all the time, Marcus. It's never different, right? It's just little bit, it's rhymes, right? It's always.
Well, I'll tell you what's really important, everybody, is diversification, right?
100%.
You've got. If you're just in one thing and you think that's going to go all the way, it doesn't matter how sure this thing is. Including your job, anything, you have to diversify. Let's move on. Because people are probably wanting to know is like, what should we invest in? What are we investing? Because we can't give financial advice.
We're going to come there in a moment. And there are a light in the end of the tunnel. Let's jump into what we're investing in as well. But I think just to talk about now, when everything has kind of collapsed, if you like, we're seeing an end of the tunnel. We're seeing that the fear is unwinding. We're seeing that there's trade deals being made, the latest one being EU and US now planning a trade deal that they're making that. And I think what you just went into, Marcus, as well, is that diversification is key. Money will circle into the risk assets, such as tech and crypto. So maybe, Keith, you can spread some light for everyone. What is a risk on and risk off assets? Just so people know what's going on.
One of the things, first of all, before we talk about risk on, risk off, we are missing one of the big points of the 90-day pause that Donald Trump put in, right? On Wednesday, we had the 90-day pause. So tariffs are not going to carry on increasing between China and the US because it has, again, been tit for tat, tit for tat, tit for tat. And all of a sudden, we saw one of the best days ever in the market. I think it was the third largest gain in the NASDAQ ever. Okay, in one day. And that one day covered pretty much the previous week's loss. Now, when we look at risk on, risk off, if there is a lot of fear and uncertainty, the bigger players tend to go to the risk off assets that are classed as being relatively safe. These assets are not connected directly to what the economy is doing. So that's like sort of healthcare, consumer staples, which is your day-to-day living, your Procter & Gamble's, your Johnson & Johnson's. And then the risk on side is when the economy is doing really well, and these are the likes of your tech, the likes of discretionary. So ones that are closely linked to what the economy is doing. Are people spending more money? Is the economy growing? Is inflation low? Is interest rates low? Because again, the three things that are going to grow an economy is low interest rates, low inflation, high consumer spending, and then that is what generates the economy to really be booming and expanding.
That was brilliant. The amount of jargon that you managed to throw into one paragraph there was awe-inspiring, I have to say. Okay, so just for everybody here, you mentioned a lot of things and then you explained some of them, but what are these discretionaries? What's a discretionary?
So a discretionary item is something that you don't really need. It's a luxury good, okay? You could look at Tesla. Tesla is a discretionary item. Do you really need a Tesla car?
No.
Louis Vuitton handbags. Do you really need a Louis Vuitton handbag?
Depends who you ask.
Again, so these are discretionary items, stuff that you don't need for day-to-day living, whereas a consumer staple is what you need for day-to-day living. Your soap, your toilet roll, okay, your shampoo, these kind of things that you use on a daily basis, that even when the economy is doing good or bad, you are still going to be buying them.
Absolutely, absolutely. Okay, good. So, do we have anything on stocks, or can we move to cryptos? Because we need to
we're going to
this
start
thing
with
along a little
cryptos
bit.
and then move to stocks. So now we know what's happening in the market, but what does this mean for cryptos? And
Wow, you have to change the whole format. Okay, go, Dennis, keeping us on our toes. Cryptos first.
Okay. And now, so we now have a unique opportunity, I think, to get into really good prices into blue chip cryptos, if we like. And for example, Ethereum is currently down 60% from its recent high, which is like you're getting a 60% discount on that soap you were talking about, Keith, right? And that could be a buying opportunity if you do your research. And we have been seeing now over the last month that whales have accumulated over 100,000 Bitcoins since early March from when the market has gone down. So I think that's the conversation to be had here. So now is the opportunity to actually accumulate some really good. You don't need to go into the fart coin or whatever it is, right? You can actually get into the really good ones like XRP, maybe, Keith, and then we have Ethereum, Solana, Bitcoin, like those type of cryptos, because those are down so much. Anything you want to add to that?
I would say is that people always go for, I mean, there's something like 21 million cryptos right now, and you showed me something, Dennis, the other day that 30,000 cryptos being created every single day. It was just mind-boggling. So basically, you don't need to be going through any of these kind of small cap cryptos. There's enough volatility, as you can see, with the big ones as well. I remember just a few weeks ago, one of our members saying, "Oh, but the market is just going up. I'll never be able to get in." And like the next day, it literally went down by 15%. It was like, "Da-da, are you happy now?" So you're right. And but you mentioned Ethereum. I mean, me personally, and I'm only talking about me, right? Because as an advice, I think that, like Solana and Sui and some of the others are just eating Ethereum's lunch.
100%.
So I don't know whether Ethereum is. It'll go up probably, but I just don't
seeing.
think
Do you remember Intel? Okay, Intel used to be the bigger player.
What do you mean, do I remember
I know
Intel?
you remember Intel, but back in the day, they used to be one of the bigger players when it comes to computer chips, semiconductors, all that side. And now you've got Nvidia, you've got AMD, you've got these companies overtaking them. Why? Because they've embraced the change. They embraced the development of technology, and unfortunately, Ethereum didn't do that. Ethereum was so reliant on other people fixing the challenges that it had with its blockchain, whereas Solana fixed its blockchain.
It's
AVAX
very difficult to
fixed its
fix
blockchain.
stuff, right? So I always give this metaphor of the underground in London. There's no way, it says, "Oh, look at the new one in this country and how much better it is." You can't. We basically have to patch things up because it already exists. Unless you stop everything and for the next 10 years rebuild the entire thing, which you can't do anyway. But if you did that, so there's no way. So Ethereum can't. How can they? They're patching things up with sellotape. That's what they're
of
doing.
course. But if you already have your blockchain that's been developed, so you've got that foundation. Can you not build on the foundation and then start?
You can do
building?
a layer 2. You can do a layer 2. That's what you can do.
You could do, but what's happened is you had Ethereum that was a proof of work cryptocurrency, moving over to proof of stake, but were relying on the likes of Matic, for example, to increase their scalability and their speed. Whereas if you look at Solana, Solana went from into proof of stake, and now they're doing proof of history. Okay, so they're actually utilizing other mechanisms to allow their blockchain to run faster, smoother, more secure, more scalable. And that's why people are moving over to the likes of Solana, because it is quicker, it is cheaper, and it's easier to build on. And that's what Ethereum is falling behind on, because they were the leader. Okay, they had all of the power when it comes to
Do
decentralized
they not
finance.
have more developers on Ethereum
Well,
than Solana?
They do.
can I pitch in?
Absolutely, Dennis. We're waiting for the oracle. Come on.
No, well, that's not the case. But I do actually not agree with you 100%. There's two things that I've heard that
Who
I
are you
think is
not
very.
agreeing with, first of all? Because we're arguing. So who are you not agreeing with?
No, I believe Ethereum could be a really good one, actually. And the reason for that is two things. Number one thing that I've talked to companies about as well, or that I've got explained to me, is that the integration between the real world is something that Ethereum has done really well. They are like the Swift system, if you like, with the banking system. Yes, can it be exchanged? Sure. But it's the integration between Ethereum and the businesses and the companies. That's the easiest path for businesses right now. And will that change? Probably. But then we have the cost of switching. And what we are seeing is two things. BlackRock, and we see even Trump accumulating loads of Ethereum for some reason. And when it comes to real world assets, which BlackRock do think is going to be the next big trend, then Ethereum is the biggest ones. No one is even close, because guess what? Chainlink actually runs the majority on Ethereum still as well. So I think that's the few reasons I would say that Ethereum could still do really well.
Well, that. There you
Definitely,
go.
it definitely
I
told me.
mean,
But-
if that didn't tell you, I don't know. But listen, we have to ask on, like Eleanor is asking here, what is a blue chip? Will you stop throwing jargon around? This was you, Dennis. You said blue chip. So explain yourself, please.
Yeah, so it's basically when they have a blue logo. I think it's it's just awesome. If they have okay, fine. So a blue chip basically means it's the household names in cryptos. Could be stocks as well. So we usually say that it's global, and that they have many different products and services, and that it's cannot go to zero within the foreseeable
Yes,
future.
but do you whippersnappers actually know where blue chip comes from originally?
No.
The blue ocean.
No, it is the high. When you go to a casino, it's the chip which is worth the most. It is the OG.
The OG chip.
Yeah.
OG.
I'm sure.
So just to finish that, Ethereum is then they have literally there's thousands of projects being built on Ethereum. So it's one of the biggest blockchains out there. It's definitely global, all over the planet. And I mean, in order for Ethereum to fail, every single cryptocurrency needs to go to zero, which is probably not going to happen anytime soon. So
All
yeah,
right, let's move on to the next one, unless you've got something very
there's
strong.
There's one more thing that I would say is with Ethereum, how long can the projects that are built on Ethereum really be happy with the cost, the speed, the challenges? Because obviously the more we're developing in regards to blockchain and we are becoming more real world assets, as you said, Dennis, RWA, so we're integrating it into the real world, speed is going to be crucial, cost is going to be crucial. Are we going to have some point that projects go, do you know what? I am not happy with the amount of cost that it takes for me to have my project on Ethereum. Let me go over to the likes of Solana. Or if you've got a crypto project that says, I actually need faster transactions, do I then move my whole project onto a new blockchain to be able to support that? Or do I wait for Ethereum to actually fix the problem when it comes to speed?
Yeah, I mean, those are all amazing questions. And I think until we see Solana and the others being as secure as Ethereum, I think that will be the moment when they can trust Solana as much. But we are seeing it. Like Render moved from Ethereum to Solana is one example out of many. So yeah, we are seeing that's happening. And Solana is definitely overtaking Ethereum slowly but surely. Why are you looking
All I
like that,
know is
Marcus? Enjoy your food.
at 1 o'clock, I have to eat.
Yeah, so let's move on here. So XRP, Keith, this is, if you didn't know, Keith actually invented XRP. Are you Brad Garlinghouse? So
yeah, for those of you who don't know, and you should never talk, if there's any children watching, you should never talk with your mouth full. Keith, on his car, his number plate is XRP. So talk to him about XRP. He loves XRP.
Well,
and it looks like, I know you want to talk about XRP, but let's move on. We need to talk about stocks as well.
Okay, let's move on. I just want to mention this, right? This is news that came out that I thought was quite interesting.
So
The
conclude the
giant
episode.
Swift system will actually integrate the Ripple blockchain. They did talk about that they would exchange the Swift system, but now maybe they will work together instead. I mean, if that's not big news, I don't know what is. There's going to come some really, really interesting news regarding XRP moving forward. That's one of the household names in cryptos as well. But Keith, All this with the tariffs, all that rubbish that is happening in the market and that has created really good opportunities. What is the opportunity for stocks at the moment?
So with the opportunity on stocks, the first thing that we have to identify is the market can stay irrational more than we can stay solvent. Now, what does that mean? We need to be liquid and being able to buy the market as it falls. Now, we did discuss a little earlier on today that it's all about choosing the right asset. What asset do you believe cannot go to zero? Now, we said about Amazon being 30% down, Apple was 30% down, Google was 30% down, Microsoft was 30% down, Tesla was 50% down. There were these assets out there which on the fundamental side, known as the Mag 7, were 30-40% down on some of them. And I would always look at which stocks can I get into which are safe, right? Because during this high time of fear and volatility in the market, I do not want to get into a stock which has a high amount of risk, because again, that does not make my money secure. And we're in the game to make profit, right? And the first stage of an investment is how can I be secure with my investment and knowing that this stock cannot go to zero. And this is where we look at the blue chip companies, as we've highlighted earlier, the ones that are strong fundamentally and the ones that are down in price. And you've got so many of the biggest companies down 20-30%. Because of the tariffs.
Let's do that. Yeah, this is a great opportunity, by the way. If you have a strategy, now is an absolute opportunity. Love him or hate him, thank you so much, the Don or Donald or whatever. Right, so now the Magnificent Seven. Anybody try and name as many of the Magnificent Seven as you can in the chat. Go ahead.
Should I name them too?
Not you, Dennis.
We should know him, Dennis.
Do you know them?
I know him.
I asked you the other day and you got 6 of them.
I got all 7.
I mean, eventually. You had to look them up on Google.
No. I got all 7.
Okay, let's see what people are saying here. Let's start them off. Microsoft, Google, Amazon,
Tesla, Apple, Nvidia, Meta.
Ooh.
Oh,
did nobody write that? Nobody wrote anything. Is there a delay?
I think there's a delay in the chat a little bit.
There's a delay.
You forgot one, Keith.
There's a delay thing.
Or they were waiting for us to say them so they can start highlighting
Bitcoin. There we go. XRP, Bitcoin, and Ethereum. I rest my case. Okay. So
and Celsius.
Thank you, everybody.
And Celsius.
And Celsius, no, I don't think Celsius class as a Mag 7, Dennis.
Wow. No, not Celsius.
Wishful thinking.
So what I would do, I absolutely agree with you. That's the opportunity in the market. And what I would do, so for example, institutions has invested billions in AI. And of course, everyone's adding AI to their business now. But the leader in AI is NVIDIA as well. As a leader in AI and one of the most profitable companies in that as well. And then we, of course, have Apple, Google, all of them are using AI as well. So this gives us that unique opportunity to invest into, as you said, Keith, the Mag 7. So I think that's pretty much it when it comes to the stock market now. That's the safest when it comes to risk reward.
And we looked at the chart just yesterday, and a company like Nvidia, which is also massively growing as well, huge demand. We know that there's 2 major trends. I mean, you could add cybersecurity, I guess, but the major trends really for me are blockchain and AI. And so when you have Nvidia, that was down how much? It was down almost 40%. 40%. 40 people, not 14. 40. I mean, I hope that, definitely our members, I hope, but I hope that everybody watching here just, with a strategy, got in, feathered in, and really got a big position here, because whether it happens today or tomorrow, whether it goes up or down, in the short term, it doesn't matter. In the long term, personally, for me, I believe it has a long way to run. And if it goes down, amazing. Okay, so if you want those strategies on how to do that and how to feather in and how to feather out, then we're going to have a link to the copy of my book, The Lunchtime Trader, so that you can have a look at that. It's a jolly good read.
Great read.
25 years of my experience in there. And so make sure you grab your copy. By the way, well done to CD Silver, who not only named all 7, but he did them in alphabetical order. But you can't do that.
Well, I can just read now.
You could read them. Fine. So he could, basically. All right, very good. So let's wrap this up for our first session. I think we've done quite well technically. We got rid of the echo, and I hope you enjoyed it. I had a good lunch.
We aren't completely done yet. We have 2 slides left. Is that okay?
Of course, Dennis. Of course.
I don't know, just quickly. So what we are doing currently, we are diversifying into the best ones, as we've been talking about already, both with the top cryptos and stocks out there. There's no need to go into the smaller ones. What people usually do, which is a big mistake, is they put too much money in too far on the risk curve, put all their money into startups and companies that might never recover when it really goes down. So most money in the biggest ones, that's what we're doing, and smaller amounts in the more risky ones. The reason for that is this. We saw one that people talked so much about. That was the real world asset token, or actually for the name Mantra is the name of it, that actually went down over 90%. This was one of the top 20 coins, actually went down over 95% in just one day.
Please do not buy into this. Please do not buy into this.
No,
Some
don't
people
buy
look
it.
at a chart like this and they say, oh, it's gone. Honestly, I've had somebody say this. Well, but Marcus, it's gone down 90%, so there it only has 10% to go. Therefore, it's a good time to get in. No, it can still fall. I shouldn't laugh, but it can still fall 100% from the point it's there. It doesn't work in the way that you think it works, right? No. Anyway, yes, so don't get into this. Did you get into Mantra?
No, I didn't. No. But the
Dennis?
main thing that you have to say as well is why. Why is price down that low? Because there's no coincidence that price is down 90% from its all-time high. So when you look at it, you have to ask yourself the question, is my money safe? Any investment that I take, I'll ask that question time and time and time again, is my money safe?
Well, and the other question, no, but there's another question, right? Another question is, like, just in general, let's take a step back. When you are investing, this should only be money that, I actually don't like saying that sentence because it sounds like people don't have a strategy, that you're prepared to lose. How can you... We should do an entire session on why you really, it's quite a challenge losing money.
Yeah, 100%.
Because if it goes down, you haven't lost because you haven't sold. It's only when you sell. And the only reason that people sell when something is down, that they've studied, that they've researched, that they believe in, is because, well, they don't really believe in it. They didn't do the research. They're panicking and then they get out. Now you have lost.
Yeah. And what they tend to do is they flip it on their head. They sell as the market falls, but buy as it goes up. So, and it's just like, as an investor, you want to be buying as the market falls and then feathering out as it goes up. But again, it comes down to, are you comfortable with the investment you take?
Yes, let Dennis talk, Keith. That's what people are saying. Come on, let Dennis talk.
Okay, we're going to wrap it up in just a moment. The last thing I'm going to add to that is this. It doesn't matter how good your research is. If you're getting into very early stage companies, and especially startups, the data is there. Like 7 out of 10, they fail within the first few years, no matter how good they are. So, but the probability of a company with among the 30 biggest in the US, there's very low probability that they will fail. So your money is so much safer with them, no matter the research you do on individual smaller companies or cryptos for that matter. So let's always go to the logical corner. And Marcus, you can say it now. Now we are ready. I think that's a great episode. And unless you have anything more to say.
Well, I think it was a good first episode. Thank you so much to everybody who has, helped with this behind the scenes, but also thank you so much for everybody that's watching and the patience, because obviously we're finding our feet here. This is the very first time that we're doing this. I will ask you this, though. Make sure that you do submit your questions so that we can have a think about it for next time, right? Then we're a little bit more prepared. And also, we will let Dennis talk a little bit more. That's on me. We will. Thank you, everybody. Thank you to the whole team. And we look forward to seeing you at the same time next week, although we might do it 12:45 because that seems like a better time to remember, at the next episode of the Lunchtime Investor. Take care, everybody. Ciao for now.
And bye, everyone. And always remember, never quit, because if they can do it, you can do it too.
You can so much, Dennis. Absolutely. Take care.